Let's welcome our guests who are joining us to help navigate today's trading day. We have with us Manas Jaiswal. Okay, Manas is going to be joining us in some time. We have Lancelot Kuna and we have Shrikant Shetty joining us in our studios this morning. Good morning, gentlemen. Lancelot, what are your top picks?
Well, I think at this point in time, I would sort of stick with maybe the beaten down pharmaceutical sector. And in that, I think Lupin seems to be one company which one can look at investing from a year or two perspective. The other sector that I would continue to look at would be the logistics sector. And I think Blue Dart offers good value since the stock has corrected significantly from its highs. And given the underlying improvement in the economy that we are seeing, we can expect better results coming in from Blue Dart over the next 2 quarters, and that should result in some amount of re-rating. So you can actually look at maybe a decent rise in the returns in the stock maybe over the next 1 year.
All right, Lupin and Blue Dart, 2 investment picks coming in from Lancelot. Shrikant, what are your top picks?
Well, from a trading perspective, we're looking at Arvind, where we're looking at a target of about 422. From an investment perspective, I would stick to auto and financials, where valuations are reasonable, where growth visibility is fairly strong. So I think Tata Motors, Maruti remain strong investment picks among the larger caps, and ICICI Bank within the financial space, where I think there is valuation remain reasonably attractive there. So probably that those 3 from an investment perspective and Arvind from a trading perspective. These are the ones which I prefer to answer.
Manas, what are your top calls?
3 buy recommendations. First is Wockhardt Pharma, where in last 3-4 months stock has made a base near to 650, but it was facing some resistance near to 750 for last 2-3 weeks time. In the last trading session, it broke the resistance of 750, 760 with great volumes. Oscillators are showing positive crossovers, so I am expecting further up move. Wockhardt Pharma can test its 200-day moving average now, which is placed near to 805. So here one can take a long call and keep the stop loss below 744. Second call is a buy call on Jan Irrigation, where I think in the month of December it took support near to its 200-day moving average, and since then it is making higher tops and higher bottoms. It was facing some resistance near to 96, 97 for the last 3 weeks time, but yes, in the last session it broke that resistance also with great volumes. So I am expecting further move. Jan Irrigation can test 107. So here one can take a long call, keep the stop loss below 95. And Just Dial, that is a buy recommendation, because after almost 100 rupees correction, stock took support near to 520 and bounced back sharply. It has made a piercing pattern on the daily chart. So you may see some more correction upside. So you can play for a bounce back. You can set the target of 570 and you can keep the stop loss below 532.
Lancelot, in terms of market move, are you surprised by the recent 1 quarter move? You think markets are factoring in the best for FY18?
I think the last quarter has been driven more by flows that have come in, especially since after the UP election results, we saw significant FI flows, given the anticipation or the understanding that maybe this current government will get an extension for another 5 years, and that will push the reform process a lot faster. And that optimism is sort of driving flows into India, as well as as well as the large amount of domestic money that is being channeled into the equity markets from the mutual funds, as well as the insurance companies. So given that we have seen a good amount of flows come in, it is now time for the earnings to catch up in terms of being able to justify the valuations. And for that, I think this quarter results is going to be an important indicator as to how the next 12 months is likely to pan out. The big trigger probably from an earnings perspective is going to be the implementation of GST and how that will reflect on companies' profitability. So there is a lot of expectation that companies will show better profits, especially in sectors like logistics, consumer goods, white goods, which are expected to see a lot of double taxation getting eliminated, as well as there is a move towards the organized sector, because the differences between selling in cash without bills and now having a bill with GST is going to make it a level playing field for the organized players, and hence we see a larger share of business shifting to the organized players, and that should augur well for some of the organized companies which will look at. So these are things which the market is expecting, and in anticipation of which we have seen the buying happen. Now we have to start seeing confirmation in the form of results and in the form of earnings, and then you will start seeing market getting re-rated, and then looking at the next financial year as a growth year.
Right, what you're saying in terms of organized to unorganized or shifting that could happen, is there any way to quantify that?
Well, it's very difficult because the unorganized data is not available easily as to what would be the quantum of sales that happens in the unorganized sector and how much of that is getting shifted to the organized sector. But if you're looking and seeing that there is a higher proportion of growth in the organized sector, and it's not merely coming from the growth in GDP, then one can assume that additional growth which the company is showing and reflecting in their sales is possibly coming from the shift from the the organized to the unorganized to the organized sector.
Right. Imtiyaz Qureshi is also now with us. Imtiyaz, what are your topics?
Very good morning, Pankaj. Yes, looking for mid caps buying right now at this point of time, because almost large cap has given very good performance. Now time for the mid caps. My first pick would be Aban, because we had seen the huge correction coming in Aban, and right now the stock has taken a double bottom support at 217. So that would be the stop loss. 220 would be the stop loss for Aban, and on a higher side I'm expecting the stocks to go somewhere around 260 or maybe 270 in coming couple of trading session. After that, I'm looking for JSW Energy. Yesterday, last session, there was a very good move for the JSW Energy, and we had seen many of the power sectors giving a better performance. And I think so right now it's time for the JSW Energy to give a better result and better performance at this point of time. With a stop loss of 61 rupees, can we see a target of 70 rupees plus? And the last would be Dr. Reddy's. Yes, we had seen the last session stocks turning to be from the oversold zone. It has moved into the right now to the normal territory on the RSI front. We have seen a very big downside from the level of 3700 to 2500, which is almost a very big damages. Right now it's time to see some value buying and some technical move at this point of time. Can be bought with a stop loss of 2650 for the target of 3000 plus.
All right, so those are the picks coming in from Imtiyaz. Let's now focus on a few stocks that are in the news. Let's start with Titan. We've got an update coming in from the management where they're saying that Tanishq has grown 40% in the retail segment in the fourth quarter. So the fourth quarter earnings could be once they surprise positively. They're saying they're seeing demand recovery in all divisions post the demonetization process. They are optimistic of achieving high teens top line growth for this financial year, which is FY18. And they are saying that the watch division has seen a good quarter. The eyewear division has seen a turnaround in the fourth quarter, but they sounded a slightly cautious note on the GST rate. They are expecting a high GST rate for jewelry sector, which may affect their growth.
Dr. Reddy's will be a stock which will be in focus. You have one of their plants where the FDA inspection was going on. It started on 27th of March. It ended yesterday. Now, the plant that we're talking about is in UP, Srikakulam plant, and that's where now US FDA has issued a Form 483. It's a Form 483 with two observations. Earlier, the plant had a warning letter status, and now it has a Form 483. However, details of observation are not known. The plant is one of the big plants that they have. It contributes 13 to 15% of the entire sales, and as the plant was in warning letter, nobody was expecting a major recovery as far as the US sales are concerned. But now that it's on the Form 483, probably the markets would wait for some details to come in on that, and if the observations are mild in nature, then probably you can even see some upgrades coming in based on this particular inspection.
All right, and there are a few other stocks that are in focus. We are getting more data about the March auto sales for Tata Motors. JLR has had a good run. We are seeing the overall JLR sales were up 19%, Jaguar sales up 132%, and Land Rover sales were down 9%. But on a net basis for JLR, the growth in sales in March was pretty strong. For TVS Motors, they too had a good run. Total sales up 10%. We saw the two-wheeler sales up 10.7%. The TVS scooter sales up 23%. So unlike some of the other two-wheeler majors, they've had a rough ride in March. TVS Motors came out with good numbers. And for Hero Moto, we saw a flattish month on a year-on-year basis. The sales were up just about 0.5% or so. So these are the auto sales numbers that we have been getting out. Imtiyaz, what would you say for stocks like Maruti and Tata Motors? Tata Motors is now on the brink of 500 rupees a share. What would you do with these two counters?
Anisha, I think so. Both are looking in the consolidation zone. If I talk about Tata Motors, then yes, there is a breakout point at the level of 480. Unless the stock doesn't closes above 480, I don't think so this would be a value buying at this point of time. But I will definitely wait for the Tata Motors to give a break above 480 so that a long position can be built up. Because unless 480 doesn't break, the trend remains negative only. And above 480, maybe today or maybe till tomorrow, the 480 would be giving a breaking point. And if that happens, then I think so the stocks will try to attempt more than 600 plus in next 1 to 2 months of time frame. So Tata Motors, out of this Maruti and Tata Motors, my pick would be Tata Motors above 480.
Right, so that's the picks coming in on the auto pack. Another stock that will be in focus will be Shobha Developers or Shobha Limited now. They always give a quarterly update before the results. So the pre-sales jump around 18%, which is a very good growth. It's 18% on a YOY basis as well as on a QOQ basis. Pre-sale value-wise is up 35%. Maybe there is some impact as far as the last quarter demonetization is concerned and that demand coming back. However, Bangalore saw a modest improvement, but the NCR region saw some great improvement coming in, and that's the reason why you were seeing the numbers the way they are. 22 overall the growth was good from the NCR region. Q4 average realizations also increased, which meant that the entire revenue-wise number would be closer to 500. That's a pre-sale number, and after some time, they have actually outperformed what was expected by the street and what the company has actually done. Let's just look at in terms of opening what is expected. Shobha should open on the positive side. You have names like Dr. Reddy's, which will be in focus. The first trades on your screen, markets open in green. Sensex close to 30,000 level, or just I think 83 points. So it was about 90 points away. It's at the 30,000 level right now. Maybe on the first tick it may have hit it, but we'll just wait and watch for it to actually cross that level. That will also be an all-time high for Sensex. That's Aurobindo Pharma for you, 685, flat with a positive bias. Grasim is up around 3 to 4 rupees, and HDFC Bank is up around 5 rupees or so. Dr. Reddy's is down 5 rupees. It's about 0.25% decline, 2,736 for Dr. Reddy's. Not much in terms of movement, 30,000 shares. Volume is good. Titan is up 3.5%. As we told you, they've given a business update, a strong one in terms of Q4 as well as what's happening with FY18. So Titan is in focus. Tata Motors is down 3 rupees, 1.5 lakh shares traded, but really not reacting to what JLR has done in terms of numbers. TVS grew by 10% in terms of numbers. 4 rupees higher, 439 for TVS Motors, 0.8% higher at this point of time. Hero MotoCorp numbers were slightly lower, but it was just marginally lower, so about 10-15,000 on a base of 6 lakhs, so it's not much that markets would react to. Let's look at Shobha Developers. It's up around 2 odd rupees right now, 345. Markets have actually slipped into the red, so markets did make an all-time high. It did go to the levels of around 29,995 for Sensex, and then you're now seeing it below the yesterday's level. So it's suddenly fallen below these levels. 9,223 now for the Nifty. L&T on your screen is down about 0.2. HCL Tech is down about 0.3, 863. Coal India about 0.7 points higher, and C is up around 1 to 2 odd rupees. Anisha, any other names that you can pick up with good volume activity?
Yes, there are a few stocks that are buzzing today and have notched up strong gains. Tamil Nadu Petro is up 10%. Then we have Dhanlakshmi Bank up 4%. KC International backed some orders. That one is up 4%. Punch Lloyd is up 3.5%. Titan is up 3%. And we've got Gen Irrigation, pick from one of our guests, up nearly 3%. Built again up about 2% or so. On the losing end, we are seeing Bharat Financial Inclusion seeing a cut of 3.5%. HDFC, a heavyweight on the index, is down 2% on high volumes, and so is ITC, another heavyweight on the index, down more than 1%. We have ICICI State Bank of India also trading marginally in the red. But this is what we're seeing when it comes to higher volumes. Some of the heavyweights are facing some pressure. Lancelot, do you like the housing finance space? How would you trade? How would you view HDFC?
Well, yes, the housing finance space is one of the interesting spaces because number one, we will see demand pick up from first-time users and owners of homes. Also, the affordable segment or the smaller segment is where the volumes are going to be driving growth. The cost of funds has come down significantly for almost all the housing finance companies, which will help improve their net interest margins, because they are yet to transmit completely the drop in interest rates across the existing buyers. While new borrowers are getting lower interest rates, the existing borrowers still continue to pay slightly higher rates, and the benefit will flow to the housing finance company. Specifically for HDFC, I think HDFC now has become more of a conglomerate or a holding company because of the various businesses that it invests in. So it has got the life insurance business, which is going to be merged with Max, and then it will get an automatic listing. So that should be positive for HDFC, because they would then be able to realize some of the value that will get unlocked, as part of the listing. Similarly, you have their other businesses which are doing well are the banking, HDFC Bank, and the general insurance. They've also got the development business, which is in the real estate development space, and the education loan business, which has been growing quite rapidly over the last couple of years. So all in all, while the size of HDFC is now extremely large, so you won't see the same level of growth that you saw earlier in percentage terms. You definitely will continue to see reasonably good growth, even at a 10% growth level on earnings will mean that these valuations that are being traded at about 3.5 times book value, it will continue to remain at that levels, because they continue to grow the large size at about 10%.
All right, so that's the view coming in on HDFC. Manas, on the charts, what do you see for some of the IT majors like Infosys, Wipro, HCL Tech? We're soon going to start the earnings season as well. What would you do with them?
See, especially Infosys, where stock was facing a lot of resistance near to 1040, 1045. And in last trading sessions, it fell sharply, broke the support of 1010. Now it is trading below 100-day moving average. And I see more correction in Infosys. Possible target comes to 975, 970. So I think any bounce back would be a great selling opportunity in Infosys, and you can keep the stop loss above 1025.
All right, that's the view coming in for Infosys. Shrikant, today we're seeing Titan really buzzing today. What would you do with this counter? After many months of underperformance, this stock has now looked up pretty well and strongly. Do you think it's headed higher from here? What will be driving its growth, and could it be a multi-bagger at all for long-term investors?
It's difficult to call whether it will be a multi-bagger because the valuations are fairly rich. So if you look at other consumer stocks, also the valuations are rich. So in terms of the potential, yes, that does have the potential because there is a shift from an unorganized to organized sector, and that could drive growth for Titan. But we need to see the sustainability, because the one quarter growth could be because of the demon impact, which might have led for some move from unorganized to organized. But if it's a more sustainable kind of higher growth trajectory which is being seen for Titan, then I think we can then we will probably sustain growth there. So that sustenance of growth will be essential. But at current levels, I think the valuations factor in most of at least the recent upsides which we have seen. So I don't see too much of upsides in the immediate short term for them.
Shrikant, in terms of valuations, you said Titan is stretched, but Titan in its entire trading history would have traded at stretched valuations by all the means, whether you look at PE, price to book, any other valuation parameter, it was always trading at a premium.
Right, no denying that. That's why I said if it can still continue to trade at a premium if this growth is sustainable, because we are seeing one quarter improvement in growth. If you look at last quarter or a couple of quarters back, the growth was not there. So if you see a sustainability of the growth, these premiums would be justifiable because there is really no other play in the jewelry segment, in the organized jewelry segment, where investors would like to confidently put their money on. So it's a strong brand. There is potential, as I said, from move from organized to unorganized to organized. Once we have a reasonable, sustainable growth trajectory visible there, I think this premium will be justifiable, and there could be more up move there from a longer term perspective.
Right. Could you also just tell us, recently some of the consumer durable names have done very well. So you can talk about Voltas, you can talk about Havells, Crompton Consumer has done very well. So there is a want to buy the consumer durable space. In that time you give such strong numbers, probably the street would like it more.
See, the expectation is that consumer durables will be doing well in terms of numbers as well. I mean, some of the companies like Whirlpool or Voltas, I mean, the AC segment is expected to do well because of the heat wave. We've seen probably more improved sales there coming from the AC segment. Most of them have been talking about 25% kind of 15 to 25% kind of growth numbers for them. So there could be the AC segment which will definitely come through. The other thing is that if you're looking at the overall pickup in the housing segment, then yes, the electrical segment could do well. So that's where some of the branded plays like Bajaj Electricals, Crompton Greaves Consumer, all these plays could potentially from a longer term perspective do well. Though I think current valuations do factor in the recent near-term upsides. These are essentially, I think, being bought from a more longer-term kind of perspective, with a 3-5 year perspective, where we see strong growth coming for the electrical, consumer electrical segment or the consumer durable segment.
Right. Lancelot, what will be your call on consumer durable pack? The point that you were making about unorganized to organized, is the markets trying to factor in that for some of these names?
Well, I think a lot of it has got factored in at this price and these prices. So, while the long-term growth story still remains intact, given that there is a lot of financing available for consumer durables, and the younger generation is keen to buy even on financing basis. So, what will happen is the long-term story for growth in the consumer durable space is strong. But one should obviously wait for some kind of correction in prices to be able to accumulate some of these stocks, because the recent up run or up move has already factored in maybe the next 1 year's earnings, and then you do not see that kind of if you don't see that kind of growth coming in the year thereafter, it could sort of become flat or become extremely range bound. So I think as an investor, one should wait for some correction in the stock prices and then look at accumulating. But it's definitely a sector one needs to look at adding and keeping it into the portfolio.
Right, let's just talk about Titan. So Tanishq, they have given an update, has grown 40%. It is in line with what they had guided for, and now they are guiding for a double-digit high teens growth for the entire business. Do you think that's sufficient for the markets to re-rate the stock, or it's already factored in?
Well, I think the Tanishq growth might have got factored in, but if you look at Titan as a story that's unfolding over a couple of years, there are various new businesses which they were seeding that have now sort of broken even. There was news that the eyewear business has started to generate positive EBITDA, and that could be a big driver for the company going forward. So Titan has always been seeding new businesses and then creating a market share in that particular business. So I think that the next big move will be in the eyewear business, and thereafter you have the perfumes business which they have just launched.
Yeah, in the eyewear business, in the update that they gave yesterday about their Q4, they have said that it's turned around. That's what you were talking about?
Yes, yes. So that's why I said that it is turned around, and then if you start seeing contribution to the bottom line from that business going forward, then the dependency on only the jewelry business comes off. So while you have seen, for example, the watch division has more or less stabilized now with 40-45% market share of watches, and the margins have come off from their highs, you will also see the jewelry business begin to flatten out as the market becomes more mature. But it is these new businesses which haven't got factored in, and I think are going to be the surprising or the new element that will re-rate the stock once these businesses begin to grow.
Right. Imtiyaz, what would be your call on Reliance Industries? Again, hitting a new high, going closer to the 1400 level now?
Yes, Pankaj, one of the best outperformer, and I think so in 2017, the best return which has been coming from the Reliance Industry, and the portfolio, the investor would be enjoying this rally. Yes, most of the returns has been already been seen right now, and I'm not expecting much more rally because almost the top has come. Previously it was 1267 was the top, and if I take it this entire consolidation zone, somewhere around 1420, 1430 would be the level for watching for the resistance. So almost it has been getting very much close to that. So maybe around the higher level one should take profit and wait for the Reliance to give some decline, then accumulate at a lower level.
Okay, look to accumulate Reliance at lower levels. Today we are seeing good moves coming in some of the hotel names as well. Indian Hotels is up 3.5%. EIH is also up today. What would you do with some of these names, Lancelot, Leela, Indian Hotels? Any view there?
Well, I think, the hotel business has been evolving over the last couple of years, has gone into, many of these companies have gone into debt restructuring, and that has almost played out. So now with the debt coming off and their core businesses starting to look up with, increased interest from the corporate sector, which was their main customer base, I think you're beginning to see that the performance of these companies will start to improve over the next 1 to 2 years. But however, many of these stocks have already seen a large move in their prices. So to an extent, I think a lot of positives have got factored in, at these current levels, and maybe we'll have to wait for a correction. Although the longer term story remains intact, so at a decline one can keep looking at adding to these to the portfolio, because yes, these are the companies that are going to get business driven by the consumer spending, and that is something which is likely to sustain over the next 12 to 24 months, and that is something that we will see drive earnings of these companies going forward.
Manas, what do you see on the charts for aluminum stocks like Nalco and Hindalco? Today they seem to be buzzing.
See, I'm still positive on Hindalco, because on any correction, the stock is taking support near to 50-day moving average. And this time also it corrected a few weeks back and it took support near 200-day moving average. Yes, the stock is facing some resistance near to 200 mark, but I think the overall trend is quite positive, and soon we may see a breakout above 200 mark, and the possible target comes near to 212. So here definitely even at current levels one can take a chance and keep the stop loss below 191.
All right. Some of these microfinance companies are seeing a profit taking. Ujjivan Financial Services is down 1.7%. Bharat Financial Inclusion is down 2.2%. On the charts, Imtiyaz, anything on these two counters?
Actually, both of the stocks look a little bit negative on the chart, and I think so. Bharat Finance and Ujjivan, if somebody is holding, should take profits or maybe should take exit at this point of time, because could be see more damages coming in. And if at all somebody want to build up the position, then they can take a short position on the Bharat Finance with a stop loss of 840 for the downside target, somewhere around the gap down, gap up opening 680, somewhere that level can be watch out.
All right. So on the charts, not looking very strong, some of these NBFC names. What about United Spirits, Shrikanta? Would you now avoid this counter after all the developments that have taken place with the Supreme Court upholding the ban on liquor near state highways? What's the outlook for this kind of a stock?
Well, certainly the near term there could be uncertainty, and near term there will be pressure on business. As is clearly visible. So clearly the Supreme Court order will have its own implications in terms of business and in terms of probably impact on the profitability. But what we normally like this stock from a longer term perspective, and in terms of business, in terms of franchisee, in terms of brands, in terms of the management, in terms of market share, I think all these things do fit in place from a longer term perspective, and we think the long term outlook will remain pretty positive. But yeah, near term, clearly there will be some downsides on account of this till we have more clarity on how the state governments or how this is tackled at the ground level.
So USL could be under pressure in the near term. Thank you, gentlemen, for joining us on NDTV Profit. Please leave us with your disclosures. Lancelot, any disclosure from you?
Yeah, I don't have any of the stocks holding which we discussed today, though my clients would be holding positions in the stocks.
Manas, your disclosure?
No personal holding in these stocks, but we have recommended these stocks to our clients.
Srikanth, your disclosures?
No holdings in any of the stocks which we discussed, but yeah, our clients may be holding positions in the stocks.
Imtiyaz, your disclosure?
Thank you very much. Personally, not holding any of the positions what we had discussed today.